Have you ever wondered why the market's going up and down? It doesn't matter what kind of market you're in. It's always going up and down. But have you wondered what is the reason? In the stocks market, for example, when some industries are going really down, but the others are just shooting right up to the moon. In fiat currency pairs, like in forex market, why some pairs are going really good, they're going down, but some of them are going up. What is the reason behind that? Or even in the cryptocurrency market, why sometimes Bitcoin is going up, but the altcoins are not moving because we call them altcoins, alternative coins to Bitcoin. So they must follow up the same path that Bitcoin goes. But why sometimes that's not working out? Or why sometimes Bitcoin is stopping at the trading range, but some altcoins are pumping like crazy? What is the reason behind that? Don't go anywhere. I have some golden points and examples just in the end of the video, which I want to tell you, and believe me, you're gonna enjoy it. Well, it's not always about numbers and data. There is a psychology behind it. A psychology of market trends. In last 2 episodes of this season, I talked about different ideas about the emotions, how they driven people, how people would react in certain circumstances. But here and now today, I want to dig more into the details of the fact that these markets are made out of people with emotions. Fear, greed, hope, and optimism are just some of the emotions that can influence our trading decisions. By time when enough people feel like each other, feel in the same way, whether it is fear or greed, then the market starts its trend in that direction. Well, here's a beautiful example of the feelings appearing as the market fluctuates. As we know it, the psychology of a market cycle. This is the example that was published by TradingView September 14th, 2019. And you can see the rest of the information up here. It is the BTC to US dollar, not USDT. So it is not that important. The only thing which you want to know is how it works. What you can see from the bottom left here is all starting from here. It is so crazy. If you look at a market in the first day, when I talked a lot about in the first season, I told you that you take a look at the chart and you say, oh my God, what is that? It's like the airplane cockpit, how a captain is using that to fly with. But after a while, when you know that you have to look at a certain point to a specific part of the chart using the right tools and indicators and with the information that you have in your mind, you can just read it. It's like you're like a neurosurgeon reading that information, that graph coming out of from a patient's brain. So down here we have the first sequence, the first level of the market, which is called disbelief sequence. So people are starting to tell themselves this rally will fail like the others, like the other rallies before that. Then the hope comes and people are starting to realize a recovery is possible. They say, okay, the price will go, let me zoom in. The price will go up and then it will recover and come back and start to range again or just go down. Then it's the optimism. And people are starting to realize, oh, this is real. This is for real. This is happening. It's here. We have to go with it. Then it is the phase of belief. It's time to get fully invested and people are bringing all their money, starting to call their friends. Hey, it's going up. We have to invest. It's time. It's good time for that. Let's pause here. Just take a look at the distance from here to here. how much of the market trend has started and it went up, and lots of people didn't even invest or enter the market. And then it's the thrill sequence, and people are starting to realize, I will buy more on margin, gotta tell everyone to buy. Hey, they're starting to post on Instagram. I can remember a friend of mine, and he was being like a bullying people and say, hey, you don't know anything about the market, it is me who knows everything, I'm a pro, because he was just having some gains out of the market. And just before the euphoria sequence, we have this sequence which is called I'm very pleased with my investment. It's like, after a couple of shots of drink and you're so happy and you say, oh, I'm feeling really good, I'm feeling pleased, it is a really nice drink, such a nice night. It's just before you're gonna mess up everything. So then we have euphoria, and it says, I'm a genius, we're all going to be rich, we're going to the moon. And then right at this point, we have the greed or buy sequence. As you can read it here, this is the highest level of financial risk, which later on I'm going to talk about this in the end of the video on the chart, and I'm going to show it on Bitcoin chart, what happened to lots of people. Then we have complacency sequence, which person is telling himself or herself, we just need to cool off for the next rally, so it's calmed down and it will go up. Then it's the anxiety sequence. Why am I getting margin calls? This dip is taking longer than expected, and people are starting to realize, why is going down? It shouldn't go that way, it was supposed to go up. And then it's the denial part. This one is really bad, believe me. I've been there. And it's like investments are with great companies, or let's say assets. They will come back. They will come back. They will go up again. And then it's the panic part, which is, shit, everyone is selling, I need to get out. And then it's the capitulation. I'm getting 100% out of the markets. I can't afford to lose more. But it's too late, see? And let's pause again here. You can see it is almost equal to optimism, between optimism and hope, when the price started to go up. And it's the opposite. People started to realize in optimism section, they started to say, okay, this rally is real. Before that, they said a recovery is possible. People were in decision. Is it going up? Is it not going up? Okay, this is real. But here they start to realize, and it's always a little bit too late. Always a little bit too soon or too late. And then it's the anger sequence. People started to say, who shorted the market? Why did the government allow this to happen? And they're starting to bring excuses. It is so funny. And the market is not going in my favor. It's this kind of sentences. And then when the market is starting to cool off here and going range and sideways, we call this the fear and or sell sequence. And this is the best time for investing, because the cycle is going to restart and repeat itself. Then we have the depression sequence. It's like my retirement money is lost. How can we pay for all this new stuff? I'm an idiot. And then again, disbelief sequence. People start saying this is a sucker's rally, and it's just the repetition of the previous sequence. And it repeats until it's going to be broken, like here. And the story goes on and on and on. But how do we understand these? We have to check this on our structural chart, which I'm going to talk a lot later on. But I need you to know only about this, which we're going to check these on higher time frames. As you can see, it's on daily time frame. We're going to check these on time frames higher than daily, like daily, weekly, monthly. And then we're going to go to lower time frames to make our trading decisions to go with the trend. And remember, trend is your friend. So we cannot go against it. Again, as I told you in the previous video, forget about all those nonsense. If you want to be like a bird and you want to fly, you have to go against the wind. It's not going to work, okay? In this market, You're not a bird. You must be like drop of the rain. Fall from the sky, find your way to the river, then go with the flow of the river and reach the ocean. So that's the way you're gonna do it. Be like a drop of the rain. You cannot be like a bird. If you're gonna be a bird, the market is gonna take you down and you're gonna be someone's lunch or dinner. So because in this market it's always, these green candles, as you can see, or red candles are people. So if you win a trade, it means that you win it from someone else, and you took that money from someone else's pocket. And when you lose it, it means someone else did the same to you. So that's all about it. Remember, when emotions can drive the market, you must stay rational and focused and decide not by your emotions, but by your own trading strategy, and stick to it. Try to focus on your fundamental analysis, which I've made an introduction video about that previously, and I'm gonna leave the link above here or here. And of course, stick to your technical analysis strategy, whatever it is. I've talked about some of them previously, but I'm gonna talk a lot more about them in the upcoming sessions. But the thing which I want to insist on here and now is that when the market, all the markets are driven by emotions, you must stay out of it. I don't mean you must stay out of the market and not work and trade. I mean stay out of emotions. So if everyone is greedy, you must be cautious. And there is a rule of thumb which I want to tell you, and this is the golden key, golden point, which I've told you in the beginning of the video, and I want to tell you right about now, is that most of the times the markets are like, especially the cryptocurrency market, is like when everyone is greedy and the price tends to return or reverse, the market goes the other way. And vice versa, when everyone is in fear and the market is about to reverse again, and the market goes the other way. Let's make an example from my own experience. A while ago, I wanted to test something in cryptocurrency market, and I wanted to trade only with fundamentals. I was waiting for a news to come up. That was the United States Federal Reserve meeting, and after that, by increasing the interest rates, the price was about to just drop dramatically. I was watching the news online on YouTube. It was live, and as soon as they said, okay, we're going to increase the interest rate, instead of the market going down, it went crazy up. So it went against everything, especially in cryptocurrency markets, when everyone it's not a written rule, but most of the times it's like that more than 90% of the times, when everyone is predicting something and they say, okay, the price will pass this point, it won't, or it's gonna do something which we call liquidity trap, which I'm gonna talk a lot in the upcoming sessions, and then it goes to the direction that it wanted to go. Let's make another example. It was late in 2021, just in the beginning of 2022, everyone was saying crazy, like, oh, the Bitcoin will pass 70, 90, it will go up to 100K, 120K. Some people were even talking of 200K. What happened? It went down even to 15K. So that's the reason I'm telling you, when the market is driven by the emotions, you must stay out of it. Let's go to the chart and show you that. So as you can see, it happened previously. This is Bitcoin daily time frame again. And this happened exactly here again. And people were, it was the cycle, it was the disbelief sequence, hope sequence, optimism, then belief in here, then thrill in here, then we have euphoria, and the story goes on. But I can remember when the price came around this area, 60K, went down, it was a pullback to 30K, then it went up again to 60K. People were starting to say, wow, the price is going up, it's going crazy, it's going all the way to 100K, at least 90K, 120, even some people said 200. It will happen, I do believe, but it was not for that time. Why? Let's zoom in and see why. So I have prepared the RSI down here only with one indicator, volatile based indicator, which I talked previously a lot about. I have a dedicated session about RSI. I have, which I'm going to leave the link above here. And you can both find it down in the description. I have talked about the different essential and basic and fundamental, of course, trading analysis indicators, which you can find out in the description in my previous episodes and seasons. But in this case, so the price went above here and people said, okay, it will go up, but it didn't. Why? Because we had divergence. See, higher high, higher high, higher high. But in RSI, we had higher lows. And then the price went down. Again, in here, it happened. When the price reached 65K and then all the way to 69K, 68K, it was like people said, oh, it will go up. But no one was talking about this RSI divergence here. And I told you beforehand, the bigger the time frame is, the more accurate your analysis are. So there is a big divergence here, and we knew that the price will go down. And if I zoom out and I look at these two tops, I see a bigger divergence in the price in here. So one high here, another high here. So you can see that the price was like this and we had a higher high, but in the RSI, we had a higher low, or even we can determine this top two, both of them. So higher low. It was a big divergence and we knew. And if we even zoom out, you can see it's beautiful and big double top. Let me change the color. So it was the neckline here and how much the price will go down. We knew, I've talked about the chart patterns previously. I'm going to leave the link above here. You can check it out too. But here and now, as the left head, and here's the neckline, and it went down just like that. It's not that accurate right now because the neckline must be a little bit up here. So yeah, it worked out. And you can see beautifully, we had lots of signals that told us that the price will go down, but more than 90% of people in the market, they said, oh, it will go up. And they were in the greed sequence, which was here, above here. And they were becoming greedy and everyone said it will go up, but it didn't. No one, I'm so super excited that why no one was talking about these facts, these obvious facts. And even if we take a more closer look, here you can see big head and shoulders here, and it went down just like that. And everything was telling us that the price will go down, but the market sentiment was like, no, it will go up. Remember, when more than 90% of the market says that the price is going to a direction, whether it's up or down, the market will go against it, or at least goes against it for a small amount of time, for a short time, to make some liquidity traps, and which I'm going to talk later on a lot about it. But just hear me now. When lots of people say it will go up, it will go down, just a piece of cake, and it won't take your permission. So there you have it, the psychology of the market trends. So did you like this video too? If you really like it, just hit that like button. If you haven't subscribed to my channel, do it right away. And by turning on the notification bell, you're gonna be the first to be informed when I'm gonna publish a new video, which I'm doing on daily basis. And share my videos with your friends who are keen to learn all about this market, which I'm telling everything about that. Thank you for watching. See you in the next one.